All right, what's up, tycoons? Super excited for today's video. We're looking at Open. Okay, this is Opendoor Technologies, and I'm gonna break down the chart for you guys. No financial advice, just some free, honest technical analysis, and we're gonna break it down using the Bollinger Bands. We're gonna look at some trend lines, some daily gaps, and as well as the RSI. There's some bullish divergence. Okay, so all I need from you guys is to leave a like, subscribe, and comment below the next ticker you want to see in the next video. Okay, I do viewer requests every single week, whether it's a stock, a crypto, a penny stock, tech stock, real estate stock, whatever it is. I'll be happy to do it for you as soon as I can. Okay. So the first thing I want to signify is we're creating lower lows. All right. So we're definitely in a downtrend. And until we break this major trend line here, we're going to be stuck in that downtrend. Okay. But what's really interesting, if we take a look at these ovals, we can see that when we've made a lower low on the chart, we're actually creating a higher low on the RSI. This is what's known as bullish divergence and gives you a sign that you may potentially see bullishness in the future. Okay, it's not 100% guaranteed. If it was, we'd all be millionaires. But what you can see is a nice setup here. Okay, we ended up getting a W pattern. All right, a nice double bottom here. All right, and it formed this nice W. All right. And what we saw here was we saw an initial bounce off of this bullish divergence because the relative strength of the stock increased, even though the actual price went lower. All right. And we got an initial bounce, but it didn't last very long. Okay. So not every time you see bullish divergence, you're immediately going to go on a huge rally. Okay. But we did come back down, find support, and retest that bullish divergence trend line. Okay. So if you look here, we can see this is our initial low, higher low. Okay, we bounced there, we came back down and bounced again. So again, the RSI went higher, but the stock price made a double bottom. Okay, it went to the same price it was below it was previously. Now that's when we went on a very nice rally. Okay, and in 14 days went up 56%. All right, so that was your signal. Okay, well, we now have a double bottom and we have 3 bounces along the bullish divergence trend line. We're good to go. All right, and you can use that for an entry, set a stop loss, whatever your own form of risk management is, and enter the trade, right? And again, we see that continue multiple times. Okay, so let's go now to this low. So here's our low. We created an even lower low, but again, if we look from here to here, all right, that's a higher low. All right, so again, we go from this low here and we draw our trend line up to here. Okay, and we can see that, all right, well, from our initial low on the RSI up to here, okay, we have created a higher low on the RSI, even though the stock price has went from $8, okay, down to $5. All right, and so boom, there's your next signal. All right, now is it as strong? No, but we do get a 4-day about 45% rally. Okay, so these are very big potential as for you in a swing trade. All right, now the key thing to remember is during a bear market, the biggest way they fake people out into buying back in is you will see about 60% of the most bullish days ever actually occur in a bear market. Okay, and there's a couple reasons for it. One is, as I said, to trick investors back into it and thinking that, hey, there's a reversal. Okay, it's very hard to ignore a stock. All right, when you see it go up 25% in a day, right? Imagine if you bought in here, all right, at $8 and you see it go up 25% in a day to 1097, you're going to buy back in more because you're thinking, oh man, I should have bought more here at the bottom. They chase into it, right? And another reason you see these such big bullish days is because there actually are very big, institutions, institutional money, hedge fund money, smart money as they call it, right, on Wall Street, that is buying these positions long term, right? And some of these holds are going to be 20 years from now, right? They're buying it at $8, $9 because they believe in 2025 and 2030 it'll be trading at $15, right? So they're going to come in and swoop in, and then they also may put a hedge in short term and short term short position in the stock as it continues lower, just so they can accumulate more. All right, so don't forget and don't get faked out, okay, just by a few bullish days. We are still in a bear market, and it's going to take a lot to change that, but don't miss out on these great opportunities for swing trades. Okay, the next thing we're going to look at, now that we've looked at those, is going to be our gaps on the daily chart. Okay, so we have our first gap here, all right, which these tend to fill about 90 to 95% of the time historically in the stock market. We had our first gap up to about 567. We went ahead and filled that here recently. Okay, so again, we had bullish divergence. All right, so I'll go ahead and show that to you guys real quick so you know what I'm talking about, even though we've been breaking it down. Okay, so here's our low. We went even lower, okay, all the way down to 443. But again, on our RSI, okay, we have our low here of about 22, and we created a higher low of 32. All right, so that's when we got our bounce, and we've seen some very nice bullish momentum, since that day in the stock. All right, and if we look here at the next day, it opened up here and it's gone on a 25% rally in the past 5 days. Okay, that's basically essentially the last trading week. The stock was on a rampage, went up 25%. This is our next daily gap up here. Okay, it's going to be right around 564, 565 range, and that's offering 46% returns. All right, so what we have is we're seeing some strength. Okay, we did knock out the first gap fill. All right. And we potentially may come up to the next gap fill. The only things we have to worry about, okay, is going to be this middle Bollinger Band right here. All right. That's going to be a very strong resistance level for us. Okay. The middle Bollinger Band is always going to act as a form of support and resistance, depending on which way the stock is moving. And the other thing, that we're facing is going to be this trend line again. All right. So, we may trade sideways and go up and down a little bit before we fill this gap. And it just depends. Are we going to be over here where we're battling this trend line at around $6, 650, 630, or are we going to be able to, fill this gap quickly before we come to this trend line? Because most likely that is where we're going to see some major resistance at and a continuation of the overall further downtrend. So don't get caught, all right, thinking that, the bottom is in. There's no rush right now, but there are some great setups across the market. All right. And if you appreciated this video, I really think you're going to like one of these next videos. Okay. I have a video on gaps. Again, that's one of the strategies I used in here. It's a nice tutorial. I have one on bullish divergence and bearish divergence. And I also have one on the Bollinger Bands. Okay. So the three things that we used in this video today, I got a video on each of them right here. So go ahead and watch one and you can learn a little bit more.